What happens when Wall Street meets artificial intelligence? Picture this, a world where computers make lightning-fast trades, analyzing mountains of data in the blink of an eye. This isn't science fiction, it's the reality of today's financial markets. AI is transforming Wall Street, bringing both huge opportunities and some serious challenges. Buckle up, because things are about to get interesting. We're talking about algorithms that can predict market trends with spooky accuracy. We're talking about the potential for a financial system that's faster, more efficient, and maybe even a little bit terrifying. This isn't just about making a quick buck either. AI has the potential to reshape the entire financial landscape. We're talking about everything from how banks assess creditworthiness to how investors manage their portfolios. It's a brave new world out there, folks, and it's time to wrap our heads around it. So, are you ready to meet the bots that are changing the face of finance? Let's talk about AI bots, the whiz kids of the financial world. These aren't the clunky robots you see in sci-fi movies. We're talking about sophisticated software programs designed to make trading decisions without human intervention. They're like the brainy kids in school who always ace their math tests, but instead of textbooks, they devour massive data sets. And we're not just talking stock prices. These bots gobble up everything from news headlines to social media trends, looking for any scrap of information that might give them an edge. Think of it like this. Imagine trying to outsmart a chess grandmaster who can make 1,000 moves per second. That's what traditional traders are up against when they go head-to-head with AI bots. It's no wonder that more and more financial institutions are turning to these digital brainiacs to manage their investments. But before we all start investing in robot overlords, let's take a step back and look at how we got here in the first place. Trading, my friends, is as old as time itself. We're talking bartering seashells and livestock long before Wall Street was even a twinkle in someone's eye. But as civilizations grew, so did the complexity of their financial systems. Fast forward to the bustling trading floors of the 20th century. Picture a sea of yelling traders in brightly colored jackets, frantically waving their order slips. It was chaotic, it was loud, and it was driven by human intuition, and probably a lot of coffee. Then came the digital revolution. Computers started creeping into the financial world, bringing with them the promise of speed and efficiency. We're talking about the rise of electronic exchanges, online trading platforms, and the birth of algorithmic trading. Suddenly, humans weren't calling all the shots anymore. Algorithms, those sets of pre-programmed instructions, started making trading decisions based on predefined rules. It was the beginning of a technological revolution that would forever change the face of finance. But this was just the tip of the iceberg. The real game changer was yet to come, the rise of artificial intelligence. Hold on to your hats, folks, because things are about to get really wild. The world of finance is undergoing a seismic shift. We're talking about the rise of AI bots, the supercomputers that are changing the game on Wall Street. These bots are not just tools, they are revolutionizing the way trading is done. These aren't your grandpa's trading algorithms. Gone are the days of simple, rule-based systems. We're talking about systems that can learn, adapt, and evolve, all without any human intervention. They are capable of processing vast amounts of data in real time. Remember those chess grandmasters we talked about earlier? Their strategic minds are legendary. Well, imagine if those grandmasters could analyze every single chess game ever played, and then use that knowledge to predict their opponent's next move. That's the level of sophistication we're dealing with. That's the kind of power we're talking about with AI bots. They can predict market movements with incredible accuracy. Take the example of Renaissance Technologies, a hedge fund founded by a former Cold War codebreaker. Their success is a testament to the power of AI. They've been using complex mathematical models and machine learning algorithms to generate insane returns for decades. Their methods are cutting edge, and they're notoriously secretive about their methods. The mystery only adds to their allure. But they're not the only ones. The entire financial industry is catching on. From high-frequency trading firms to giant institutional investors, everyone's trying to get in on the AI action. It's a race to harness the power of technology. And it's easy to see why. The potential for profit is enormous. These bots are fast, they're efficient, and they don't need bathroom breaks. What's not to love? They operate 24/7 without fatigue. Well, as with any powerful technology, there are some potential downsides we need to talk about. The risks and ethical considerations are significant and cannot be ignored. AI gone rogue? The ethics of automated trading. Now, before we all start bowing down to our new AI overlords, let's pump the brakes for a second. While the potential of AI in finance is undeniable, it also raises some serious ethical questions. We're talking about the potential for market manipulation, algorithmic bias, and even the displacement of human jobs. These are not just hypothetical scenarios, but real issues that need addressing. Imagine a world where a few powerful AI systems control the majority of trading activity. Sounds like a dystopian sci-fi movie, right? But it's a real concern. These systems could, theoretically, collude with each other to manipulate market prices, leaving regular investors out in the cold. This could lead to a loss of trust in the financial markets. And then there's the issue of bias. AI systems are only as good as the data they're trained on. If that data reflects existing biases in the financial system, then guess what? The AI is going to inherit those biases, potentially leading to discriminatory outcomes. This could exacerbate existing inequalities in the financial world. Let's not forget about the human cost of all this automation. As AI bots become more sophisticated, they're going to replace more and more jobs in the financial sector. We're talking about traders, analysts, even portfolio managers. What happens to those people? Will they find new roles, or will they be left behind in this technological revolution? These are questions we need to grapple with as we enter this brave new world of AI-powered finance. So, what are we doing about it? Are we prepared to face these challenges head-on, or are we simply hoping for the best? Keeping the bots in check, regulation and risk management. Don't worry, folks, it's not all doom and gloom. There's a lot of proactive work being done to ensure a balanced and fair financial ecosystem. While the ethical concerns surrounding AI in finance are real and cannot be ignored, the good news is that regulators and industry leaders are starting to take notice and are actively working on solutions. We're talking about new rules, guidelines, and technological safeguards designed to keep those pesky bots in check and ensure they operate within ethical boundaries. Think of it like this. Just as we have rules for human traders to prevent insider trading and market manipulation, we need similar rules for AI bots to ensure they're playing fair and not exploiting the system. These rules are essential to maintain trust and integrity in the financial markets. We're talking about things like transparency requirements, so regulators can understand how these algorithms work and make informed decisions. This transparency is crucial for accountability and for ensuring that AI systems are not operating in a black box. And let's not forget about kill switches to shut down rogue bots before they can do any damage, protecting the market from potential crises. But it's not just about government regulation. The financial industry also has a responsibility to develop ethical guidelines for AI development and deployment. We're talking about things like ensuring algorithmic fairness, mitigating bias in training data, and being transparent about the limitations of these technologies. These steps are essential to build trust and ensure that AI systems are used responsibly. Mitigating bias in training data is particularly important to prevent discriminatory practices and ensure fairness. And being transparent about the limitations of these technologies helps manage expectations and prevent over-reliance on AI. And let's not forget about risk management. As AI systems become more complex and integrated into financial operations, it's more important than ever to have robust risk management frameworks in place to handle potential issues. We're talking about stress testing algorithms under different market conditions to ensure they can handle various scenarios. Implementing early warning systems to detect anomalies and prevent issues before they escalate is also crucial. These systems can provide valuable insights and help in taking timely actions to mitigate risks. And having contingency plans in place in case things go haywire ensures that there are predefined steps to manage crises effectively. It's a work in progress, but the good news is that the conversation has started and significant steps are being taken. The collaboration between regulators, industry leaders, and technologists is paving the way for a safer and more ethical financial future. The future of finance AI's transformative potential. Look, I get it. All this talk of AI, algorithms, and bots can be a bit overwhelming, but here's the thing. This technology isn't going away. In fact, it's only going to become more powerful and more prevalent in the years to come. But instead of fearing the rise of the machines, let's focus on the incredible opportunities that AI presents. We're talking about a future where financial markets are more efficient, more accessible, and more inclusive. Imagine a world where AI-powered robo-advisors provide personalized financial advice to everyone, regardless of their income level. Imagine a world where small businesses have access to sophisticated investment tools that were once only available to Wall Street titans. AI has the potential to democratize finance, leveling the playing field and empowering individuals and small businesses in ways we can only imagine. It's about time we harness the power of this technology for good. So, are you ready to embrace the future of finance? Dive deeper. The AI revolution is just beginning. Well, folks, there you have it, a crash course in the wild world of AI and its impact on Wall Street. We've covered a lot of ground, from the rise of trading bots to the ethical concerns surrounding this technology. But this is just the beginning of the story. The AI revolution is still in its early stages, and the next few years are going to be incredibly exciting, and maybe a little bit scary. So, what can you do? Don't just sit there like a deer in headlights. Educate yourself about this transformative technology. Read articles, listen to podcasts, and engage in conversations about the future of finance. And most importantly, share this message with your friends, family, and even that weird neighbor who always wears a tinfoil hat. The more people understand the potential and the perils of AI, the better equipped we'll be to shape a future where this technology benefits everyone. The future of finance is here, and it's powered by AI. Let's make sure we're ready for it.